and a very warm welcome to all of you from everyone here at London Southeast. For those of you who don't know me, I'm Donald Leggett, Head of Investor Relations at London Southeast, and I am your host for this evening. We're delighted to welcome Primary Bid, who are sponsoring our autumn webinars. As you probably already know, Primary Bid's raison d'etre is to give individuals like yourselves access to one-off public company fundraisings and IPOs on the same terms as institutional investors. The best way to hear about their offers is to register for their website, which is primarybid.com. The four companies speaking tonight are Zephyr Energy, Power Metal Resources, Churocco Energy, and SpectrumX. As usual, each CEO gets 30 minutes to make their investment case, with up to 20 minutes spent talking to slides. Then we take live questions from the audience. To ask written questions, which I'm sure lots of you want to do, click on the Q&A button at the bottom of the screen and to the right. Please give us your real name and keep things short and understandable. We generally get more excellent questions than we can get through, so do think about getting your questions to us as soon as you can, and do make clear which company that you're actually asking a question of. And to assist those investors who can't make it tonight, why not post messages on the London Southeast company chat boards? I think everyone from company management to PRs and AIM advisors read the investment discussions on there, although they may not all admit to it. And finally, that's a guilty secret for some. Finally, let me tell you about our future live events. This is the bit I enjoy. We have 3 more between now and Christmas, and those dates are Tuesday the 19th of October, when we host Greatland Gold and Poolbeg Pharma. That'll be a night to remember. Tuesday 16th of November, when we have Advanced Energy and Alien Metals speaking, another good one. And Tuesday 7th of December, when it's Cora Gold. So look out for our email alerts, and that's it for tonight's housekeeping. We start the evening with AIM-listed Zephyr Energy, an ESG-focused oil and gas business with operated assets in the Rocky Mountains, which has been buying distressed, non-operated assets in the Wilmington Basin in North Dakota. The plan is that revenue streams from the new assets should pay for exploration and future production in the Paradox Basin, Utah. The Zephyr share price reflected the excitement with Zephyr the top performing share on AIM from January to June 2021. See, we only bring you the best here. Today, the market cap is around £71 million. We're delighted to have the CEO, Colin Harrington, with us. He's live from the States to give us an operational update. Welcome, Colin.
Thank you, Donald. Thank you for that introduction, and welcome everybody. I really appreciate you taking time on a Thursday or Tuesday night to listen into the story. Much appreciated. So we've had tremendous momentum this year, a lot of progress and a lot of things to come. I will try to get through it quickly so that I can take your questions at the end, and I hope everybody can see my screen at this point. Let's see. So skipping through the disclaimers tonight, what I'd love to talk with you about, I'll give you a quick corporate overview, review what we're doing on the non-operated side of the business in the Williston Basin, walk you through our flagship operated asset, and talk a bit about our ESG philosophy and how that ties in, as well as give you a summary and a set of next steps as to what's coming. The picture on the right here, by the way, just for those interested, is the drill bit that we just used on the State 16-2 LNCC well. Was down at 14,700 feet before not that long ago, now up and safely back to surface. So to move forward, I always preface by saying this: we have 2 core values, and every decision we make in this company is guided by those values. We will be responsible stewards of investors' capital, and we will also be responsible stewards of the environment. It's really important to me that everything we do is colored within those lenses. So to give you a bit of the corporate overview, we are an oil and gas company, 100% focused on the the responsible resource development and carbon neutral operations in the Rocky Mountain region of the US. We've got a very large operated asset, the appraisal asset that we're developing in the Paradox Basin of Utah. And then we've got a portfolio of non-op assets that we're growing quickly in the Williston Basin. The operated side in Utah, there's a lot happening there, which I'll walk you through tonight. But it's a large position of about 37,000 acres, seismic across the majority of that acreage. a lot of log and core data, and recent pressure test data as well. Our well there, the State 16-2 LNCC, has just been drilled. It's safely at TD right now, and we will be completing it in the near term. And that well will be the first test of modern hydraulic stimulation and a horizontal wellbore in this part of the basin. We're really excited about that. It's a proof of concept, which could lead to a much wider development there. On the investment side and the non-operated assets, we look for near-term opportunities with strong operators where we can acquire non-op interests for low acquisition costs as related to CapEx, get rapid paybacks, strong margins, and we use that cash flow, as Donald said, to fund a lot of what we're doing in the Paradox Basin or to make other acquisitions. We have funded 4 acquisitions to date this year. There's been a lot that's going on. All of that has been funded from cash on the balance sheet after our raise in March. We now have just over 500 barrels a day in August from that production, and it's growing. We should have an additional 15 wells coming online over the next few months, and a lot more production growth happening there. So to take you to our corporate overview, share price has been around 6p, just under 6p as of yesterday. That's a market cap of 72 million pounds. There are 1.3 billion shares in issue and 0 debt. We are very conservative with our use of leverage. At the right point, with the right amount of production, we may layer in a bit of RBL type debt, but we're very conservative in that side of things. The board and our affiliates have bought 12% of this company over the last 2 years. That's not share options and share salary sacrifice. This is we've purchased shares with our cash, and we're very aligned with our other shareholders. We also have about 16 million in tax losses, which can be used to offset the income which is coming from our wells that are now producing in North Dakota. So from a corporate standpoint, I love how we're positioned. Obviously the shares have done well this year, and I think that was really teed up by what we did in 2020. We announced a $2 million government grant to drill a research well on our site. We were able to later go in and use that wellbore to drill the lateral portion of the State 16-2. It was a very safe operation, successful operation in record-setting time, all while adhering in a very difficult environment to COVID-19 protocols and so forth. From that, we got the first look at a continuous core in this part of the basin. We got a lot of sidewall cores and a huge amount of log data, and all of which has been under analysis since. And at the same time, we went out and received and were able to put together an agreement to start acquiring economic production and near-term production in the Williston. And that was at a time where the oil price was around $45 a barrel. So very happy with our positioning there as well. That's led us into 2021. We did a 10 million pound fundraise in March, which has fully funded us for everything we wanted to do across this portfolio. And what we've done since then, we've drilled the horizontal portion of the State 16-2 safely and successfully to TD. We've located it in a great spot of the Cane Creek, and that well is now ready to be completed by a hydraulic stimulation in October. We've done a huge amount of analysis on the data received from the logs, the cores, and pressure test data, which have all given us a series of green lights telling us to go forward with this development. And for that reason, we've elected to run production casing on the well and complete it as a test of a hydraulically stimulated resource play, an Hsrp. If we are successful in doing this, it could lead to a significant upsizing in our resource estimates. So I said before, we've done 4 different Williston Basin acquisitions, which have given us exposure to 22 different well bores, 500 barrels a day online with that right now. The other 15 wells have all been drilled and are awaiting completion, and we'll see that come online over the next few months. We've also added additional acreage in the Paradox based on the excitement from what we've seen to date. The rest of this year, the way we're going to focus, we have made a commitment to be 100% carbon neutral by the end of this month. We will be delivering on that commitment. We are also spending much more time reaching out to existing shareholders, partners in the US, industry partners, and investors in the US. We're now dual traded on the OTC. We will be completing this well, which is a proof of concept for Hsrp in the Northern Paradox, and planning for additional wells given the excitement of what we've seen so far. And obviously, we're generating a fair amount of cash flow at this point, which will be utilized back for further Paradox development. And on the non-op side, Again, 22 wells with working interest that range from 1 to 37%. We expect our production number to be growing nicely over the next few months, and we see a lot of opportunities to acquire similar assets in the near future. So let me talk just briefly about the non-op portfolio to give some people context behind the Williston Basin and what we're doing there. North Dakota, monthly drilling and completions. You can see after December 19th, when COVID hit, oil production and gas production has fallen somewhat from there. We're seeing a slow return, but overall, there's still a fair amount of distress in the sector in this area. That being said, the people that we're partnering with, including Continental, which is circled CLR, and Whiting, circled down below in the pie chart, they're two of the largest operators here in the Williston Basin, very active and very quickly moving forward with their drilling and completion plans. And we're happy to be a partner with both of them. Just to give people a sense of how we step into these positions, the chart on the left here, the map, is just a standard township and range map that you see without any wells put in place. And the red boxes are some of the pads that we participate in. Each of those boxes, the small boxes, is 1 square mile. So operators come in and try to get a majority in a 1, 2, or 3 mile position and propose wells and drill them. But because of the messy nature of land holdings here and lease holdings, as evidenced by what you see on the right, you can see you can have a huge number of operators in one relatively small area and thousands of wells. So in this case, to the right, Equinor, Hess, Kraken, Whiting, they're the primary operators where we are. They are all, to their own extent, subject to capital constraints at this point, investor constraints. They are largely unwilling to be drawn into non-operated investments when one of their lease positions is nominated by somebody else. So through our relationships here, through our JV with Purified Resource Partners, we're able to step into drilling obligations that operators might not want to. And it's not just operators, it's a whole host of leaseholders, and pick up exposure into near-term drilling so that we can participate in near-term production. Again, all on the non-operated side, but the economics are wonderful, and I'll walk you through that next. You know, what we try to do when we're looking at asset acquisitions in this area, we want reduced drilling risk because you're in a prolific area where it's well understood, the geology is well understood, or sometimes zero drilling risk. Almost everything we've done so far, we've acquired wells that have already been drilled and are awaiting completion. That means you get cash flow in the near term. You have the ability to generate hurdle rates that are in excess of 40% IRRs with very rapid paybacks. It helps us cycle cash more quickly. It lets us utilize our historical tax loss position of over 16 million and to step into deals with low entry costs. Really, the costs that come with this are the CapEx burdens that we pick up. We always partner with strong operators. That's a key location. Our two real criteria are excellent locations and then obviously the right operators to do that. And we are able to layer on production and cash flow to shape it fairly nicely to maintain a strong profile going forward. This has all been a lot of progress in a short period of time. We will release updated production and cash flow estimates once we hit peak production volumes from these initial wells. Obviously, more are being layered on behind that. And with this recent JV with Purified Resource Partners, and they are acting as a co-investor, I should add, a co-investor and an advisor to us, we have a significant amount of additional deal flow, and I'd like to continue to deploy capital here. So let's turn to the flagship, the operated asset, which is the Paradox Basin, and that's a picture of the Cyclone rig number 34 that recently drilled our well here. It's a big position, as I said before. We have an application for a new federal unit across it in progress. Unlike most U.S. basins, this has historically been a natural fracture play. So there have been 10 million barrels produced to date, largely in what's called the Cane Creek Reservoir. Horizontal drilling and hydraulic stimulation really have not been utilized here. And that's part of the opportunity that we see. In recent years, you've seen a move from 2D to 3D seismic. We have very recent 3D seismic with sophisticated horizontal drilling techniques, directional drilling capabilities, and improvement in completion. We think there's a massive opportunity to take some of that and test it out across our own leasehold. And I'll walk you through why we feel optimistic about that. As I said before, this is 25,000 acres under seismic. The rest does not have seismic yet. It's a mix of federal and state leases. There's good access. There's infrastructure, roads, and even pipelines across our position. And importantly, the Biden administration has halted the issuance of new federal leases. So active leases like what we have here, contiguous ones, 25,000 acres that are contiguous, are exceptionally hard to replicate. We've approached this project in a very measured way. We have a measured approach to risk. The reason we had that caution stepping into this is it's an appraisal project in an underexplored area with very high pressure reservoirs. There's the presence of natural fractures throughout, which is beneficial, but also can pose drilling challenges. And unlike other resource plays, you don't have a lot of historical data in this area from vertical wells. So if this had been an easy place to come and do hydraulic stimulation, it would have been done before, it would have been exploited, certainly at the beginning phases of play. We think now is the right time. The other caution is we always have lease maintenance and gas export challenges that we are going to face while we're pulling this together. I think we've largely addressed those, but it's something that's always on our radar screen. Now, the reason we have optimism as a company is because of this contiguous acreage position. Difficult to replicate. We love that it's been underexplored and that it has very high pressures, which drives the reservoir drives well. In the Cane Creek alone, we have a lot of reservoir. We have a number of targets, but there are 20 overlying reservoir targets in addition. Those provide us with 8 high-graded reservoirs that we've decided to pursue. So we think we can add both resource potential through that, as well as by trying to develop this through hydraulic stimulation. We have de-risked this with our seismic, with all of the cores that we've gotten, all of the analysis we've done, all of the pressure tests, and by using internal and expertise through academic and third-party partners. We've de-risked it from a drilling standpoint because the well is drilled, and we've de-risked from a capital standpoint because we received $2 million from the government. So we feel like we're very well positioned to take the next step here. To kick off what we've learned so far, we've drilled and we've landed in a perfect portion of the reservoir. We ran wireline logs that suggest that we have just about 4,000 feet of horizontal well, which can be completed. We've set production casing, and we've done this fracture injection test, which is simply, it's almost a miniature fracture at the toe of the well where you stimulate it, add pressure, and see the response. That gives us a lot of data to make the decision to go forward. What we've observed, there is hydrocarbon presence, not just in the Cane Creek target, but in all of the 8 overlying reservoirs in front of us. There is high formation pressure, which is a great indicator of reservoir drive. The permeability in this reservoir looks very consistent with other prolific plays like the Williston in the US. And we've seen evidence of hydrocarbon flow, demonstrable evidence into the wellbore during the defit operation, which again has led us to the place where we will go and complete this as a hydraulically stimulated completion. The next steps for that, we'll have a completion crew there in the second week of October. That completion work should take less than a week, and we'll begin producing rate after that. Now, I want to caveat this by saying it's been a summer of extreme weather events and supply chain disruptions. We've maintained an ambitious schedule. We've hit all of our targets through mudslides to our main interstate, flash floods, smoke from fires. It's been an intense summer, and there are labor shortages across the region as well, particularly around trucking. We've done our best to operate through that. We've done it well, but it's always in the back of my mind that we do have challenges there. And again, the other challenge here, it's a highly pressurized reservoir that can pose challenges while you're completing it. But again, strong completion design and the right execution is critical, and we think we have that in place. The reason we're completing this through Hsrp is it provides potential for significantly larger and a more predictable project than targeting natural fractures alone. There's a nice interplay potentially between the existing natural fractures and the hydraulically stimulated fractures. It leads to a much wider development where we are likely to develop the overlying reservoirs. And it's just the overall size of the prize we believe is both increased and also de-risked. So what is that size of the prize? These are internal resource estimates for Hsrp development using the Cane Creek and 8 overlying reservoirs, all risked, decent risks and recovery factors. What we see is up to 200 well locations across this portion of our acreage. That's an estimated P50 of 1 billion barrels of oil equivalent of hydrocarbons in place, again, across these 25,000 acres. and up to 143 million barrels of oil equivalent of net contingent resource that's recoverable. We are working with the CPR firm to update the economics behind this, and that'll be finalized post completion of this well in the fourth quarter. So much more to come on that front. Last considerations, based on the green lights that we've seen, we are envisioning a multiple well campaign here in the near future. We feel confident that not just the Cane Creek, but the shallower classics offer opportunity, and our board is fully supportive of drilling out additional wells here to delineate the acreage. Important things that we do right now with the State 16-2 will help us understand things like well completion techniques, spacing, and even lateral length. Lateral length is a great point. This initial well is 4,500 feet of lateral. Future wells would likely be 10,000-foot laterals that are extrapolated out accordingly. There will be future improvements that help us bring even stronger production numbers and resource numbers here.
2 minutes, Colin.
All right. So lastly, on our ESG side, and this is a picture of my dashboard at 101 degrees. Our philosophy is that climate change is a threat. We should be engaging with the industry rather than straight divestment. Oil and gas is in global common usage, and our industry needs to play a role in solving that. So we have announced 100% carbon neutrality, carbon mitigation program by the end of this month, and we are a large way to getting there. Similarly, on the local side, Hsrp developments have been controversial in places across the US for noise reasons, traffic reasons, emissions, water usage, and so forth. Here, with our location, and I'll give you a bit of a tour, with a much better well spacing and with zero traffic noise or emission impacts, we think this is the right place to be going out and developing this type of development. So let me give you a few pictures. This is our closest convenience store. It's about a 5-minute drive from our site. There's nothing around this for miles in either direction. Joe's is the place if you need gas or food, this is where you go. From that point, you proceed down what nominally is a paved road, at least in some places. And from there, you look for the road signs that lead you out to our well site. It's a dirt road from that process. Everything that you can see in this picture is Zephyr leaseholding. You proceed from that along a dirt road and eventually find a rig that comes into view, which you can see there in the future. This is the residential dwelling on the pad. I think it has not been lived in a little while, but it's the closest thing we have to neighbors. But what we do have is existing utilities across the leasehold, and we also have the existing pipeline. So again, a great place to try to do this type of development. So final steps here. When I look at these assets combined, we've made huge progress understanding what we have in the Paradox. We've de-risked it completely to the extent that we can without completing this yet. But financially, technically, and with the analysis we've done, we feel like we've made great progress. The next step is getting the completion data and then future wells drilled. On the Williston side, we're going to continue to get complementary asset acquisitions and see increases in our current production coming on shortly here. In terms of next steps, you will see an announcement from us shortly around the Scope 1 carbon neutral operations and half-year results. The completion crew will mobilize shortly. There will be production there following. And there will be a lot of data that flows in the fourth quarter. Williston production updates, a revised CPR covering both sides of our business, newly acquired wells coming online, and always potential for additional partnerships or acquisitions. My vision is to scale this into a carbon neutral oil and gas company with growth from the current wells in the portfolio, with growth from resource to reserve conversion, with growth from resource additions from the overlying reservoirs, not just the Cane Creek, growth from development type by using the Hsrp, and growth from continued acquisitions. And always, always, always to be responsible stewards of our investors' capital, of which I am one of them, and responsible stewards of the environment. So that's where we are, and I'd be happy to take questions. Sorry for plowing through that so quickly.
Okay, Colin, thank you very much indeed. Yep, you packed in a ton of things there, Colin. Can I start by asking you about due diligence and the deals that you've been pulling off at great speed?
Sure.
How hard is it to guarantee that what you think you're buying is what you actually get? How easy is it to do due diligence?
With preparation, we can be quite good at it. So we started by looking at the Williston by taking, as you saw from that map, in our one county alone, I think there are 8,000 wells. We have access to production data and forecasts. We take that and we built a basin model focusing on locations that are most effective, and also parsing things like operators, vintage of well completions, completion spacing and design. There are a whole host of factors that we've put into a database, and we can actively look and quickly, when something is presented to us, A, see if we like the location, B, if we like the operator, and C, the plan. We then take that, build our own internal type curves and forecasts, triangulate it with third-party data, which we also receive. And then lastly, if there are operator forecasts available that are public, then we will triangulate it with those as well. So it's a lot that gets packed into a short period of time, but because we've done a huge amount of prep work, we can be responsive to sellers. We can give offers relatively quickly, and we feel very confident working in an area with so much production data and history that we can build curves that are conservative and will be met. So it's a great question. It wasn't easy to get to this point, but we think we're in a really good position now to continue building as quickly as we'd like.
Okay, and what about other acquisitions? Might your next acquisition be in the Wellington Basin or elsewhere? We're always going to concentrate on Rocky Mountain basins. We have a strong comfort level in the Williston, and we also have spent a huge amount of time and have built up a similar data set in the DJ Basin, which is Colorado and Wyoming. So we are certainly looking, and I think it's most likely that you'll see us in either the Williston, in North Dakota, or Montana. We've just stepped into Montana recently. And similarly across the DJ. That's where I would expect non-op acquisitions to come. Operated side, we have our hands full. We have such a large project there that now that we've built up around that and recently acquired the additional acreage on that end, I feel really comfortable with where we are on that side. Okay, a cheeky one from me, Colin. Hydraulic stimulation at the Paradox Basin. How does that fit with your ESG credentials?
Well, look, I think as I was trying to show through those slides, if there's ever a place to do it, this is a very good place because it minimizes the surface disruption. We can go into, I think I've mentioned this before, and apologies for the office phone there, but we are operating on what used to be a missile range, an Air Force missile testing site. There's lots of roads and infrastructure throughout, but there are no people. So a lot of what goes into the complaints about hydraulic stimulation are noise, traffic, air and emission complaints, or water problems with fresh water or trucking of that water in. We don't have those issues on our site. We are good neighbors to the community of Green River, which is 12, 13 miles to the northwest, and we utilize a lot of people from there, but there won't be local concerns from that. And when you look at the more broader basis globally, we are doing our part right now to mitigate all of our carbon footprint from scope 1 and scope 2 emissions. I hope to be doing more and some pretty creative things in the future, but we think this is a step and a good step for now.
Okay, you're dual traded on the OTC, and Douglas Rouse and David Johnson both make similar points. Basically they're saying there's not much happening on that OTC. The American appetite seems to be low. The American investor share platform hasn't yet excited. What are your thoughts on that?
I agree, and I think it's 100% incumbent on me to get out and start telling this story in the U.S., which we haven't really done to date, but we will begin now that that platform is up and running, and now that we've reached a certain level of scale, both with our non-op operations coming in nicely, and we're on the precipice of good things in the Paradox, in my opinion. I think it's the right time. So I will be making a concerted effort over the next few months, both to build up, retail and institutional investor awareness of our story, as well as continue to talk to partners and strategic partners that we might have here. So I couldn't agree more with you. It's something that we need to build up, and we are aware, and we'll certainly be working on it over the next few months.
Great. Kenny McKeever, who may be a Scotsman, given that he's called Kenny McKeever, he's got in touch by email to say, well done. Here we go. I'm saying nice things now. Well done for the investor communications from Zephyr, which is best in class. So take a moment to bask in the glory of that.
Thank you. I mean, very kind.
However, he says it would be useful to see an estimate of the discounted NPV value of the Zephyr estate in its totality, taking all the latest assets and Paradox drilling into account.
Absolutely. Again, I couldn't agree with you more. We've done so much in such a short period of time that sometimes the data, the volumes, the cash flow need to catch up with where we are. So the fourth quarter is really that period. We are putting together a CPR that will cover both the Paradox Basin and everything that we've done in the Williston with the economics behind that. So you'll have a sense not just of reserve estimates, but third-party stamp on what they think the economics will be. And by that point, we'll have enough time particularly from our Williston Basin production that will have hit peak. We'll understand where it's leveling off. And I think we'll be in a better place to do that. So I couldn't agree more. It's a function, I think, of doing a lot in a compressed period of time. And now we have to pull it all together and be able to demonstrate what it looks like as a whole.
You're growing up in public, Colin. It's a difficult thing to do. Okay. Kenny also asks a slightly cheeky question. He basically says there are lots of fantastic news, but blah, blah, blah. Share price isn't really going anywhere. One way to realize value is to actually sell the company. Would you ever consider doing that?
Of course, absolutely. I mean, remember, my partners and I and our board have 12% of this company right now. So we're very vested in the equity value of this. This is not a lifestyle company. It's one where our drivers come from our ownership. If it makes sense from an investor standpoint to bring somebody larger in, whether it's a partner in the Paradox Basin, or whether it's selling the company to somebody that could drive it forward, 100%. If, with anything like that, we will be extraordinarily careful to measure up the risks of doing so, to measure the opportunity that comes from it, to make sure that it would be going into good hands. But of course, philosophically, we will consider all options that are in the best interest of shareholders.
Great. Last question for you, Colin. Simon Thompson says, is the real risk the federal application on the Paradox Basin could be denied? There you go. That's your last question. Okay.
No, so we've already received the permits for this well, obviously, and we have other permits in our back pocket. We also have a lot of state land that if we have trouble permitting federal wells, we could turn and drill pads from state land. It's actually where we're drilling from right now. So I think we're relatively well placed. The administration has shown an unwillingness to give new federal leases, but they have been approving federal drilling applications. I think, again, if they're going to look at a positive light at any type of drilling, doing it in a place like we're doing and with a real focus on the environmental concerns, I feel well positioned there, and I fully support what they've done to date. So happy how we're positioned, and I think it's a great question, but one I feel comfortable with.
Colin, thank you so much for joining us tonight. You've been a star, and thank you for getting through so much information and giving us so much detail. Thank you.
I couldn't see my slides. I hope they worked across it. So thanks, Donald. Thanks everybody for watching, and a quick plug for Tom Reynolds, who's one of the most thoughtful non-execs I know. I hope everybody can watch Scirocco after this.
That's right. He's number 3. So hang on for the rest of the presentation to see Tom Reynolds.
Excellent. Thanks, Donald.
Our next company up is Power Metal Resources, an AIM-listed metals exploration and development company. POW, Power Metal, has interests in a portfolio of projects across Africa, Australia, and North America. And it's exploring and developing for cobalt, copper, gold, nickel, silver, PGMs, and REE. And what Power Metal hopes to find is a large-scale metal discovery. Paul Johnson, CEO, and Oliver Friesen, Exploration Manager, they join us tonight. So it's a double header. We'll get 2 for the price of 1. Paul will introduce the company and talk for a few minutes, and Oliver will take us through 3 of their interests in Western Australia, Botswana, and in Canada, and then they will both take questions. Over to you, Paul.
Thank you, Donald. Can you hear me okay?
We can hear you beautifully, Paul.
That's good. Thank you. I come from a private investor background. I'm a chartered accountant for my sins as well. And one question I asked myself about the junior resource space, and I invest heavily in the junior resource space. But I do wonder how junior companies around the world, Australia, Canada, and in the UK, can ever possibly make a discovery, given their limited access to capital, the flexibility they have to display on a day-to-day basis in their businesses, the difficulty and challenge of a heavily cyclical market where things go very positively for a period and then very negatively for what seems to be a much longer period. And I think after my experience over about 10 years in public companies, seeing the major highs in the likes of Greatland Gold that I helped to refinance and restructure in 2016, go on to £1 billion cap, and other companies that perhaps in certain cases haven't performed quite as well. I've seen that it's creativity, it's innovation, it's constantly adapting and changing that really makes the difference. And the business model we have for you tonight is forged on that basis. It's taking a very small company from 2.5 years ago with a less than £1 million cap, building its portfolio, building its value, strengthening its finance, and taking it to a new level where we think we're in the position to make a number, not just one, a number of major discoveries. Now, moving on, in our presentation, we have a short presentation for you tonight because we have 13 projects across 3 continents. We can't do it in 18 minutes. So we've skimmed down to a quick overview of the business by me, and then Oliver, who's far more talented, good looking and knowledgeable, is going to take you through 3 of our operational projects that are in exploration phase right now. And in addition, he's going to take you through the recent acquisition of our uranium interests in the Athabasca Basin in Canada. We have a disclaimer. I'm not going to go through that, but please, I would always urge everybody, don't believe the speakers, including me, including Oliver. Please use this opportunity tonight to learn a little bit about the company and then move on and do your own research. It's so vital. We are all talking our own book. Power Metal Resources as a company is a global project. It's spread across 3 continents. We have 13 projects across those 3 continents. Already underway or planned for 2021 are 11 exploration programs, and 5 of those include drilling. We are going into one of the most active phases in the company's life cycle. We've built over the last 2.5 years, since February 19, what I think is one of the most powerful exploration and development models in the London capital markets, or potentially the world. We've done it on the back of hard work, working like donkeys really half the time, and also using that creativity and innovation to work with joint venture partners to acquire new opportunities, to spread out our connection base and find the next best projects. We're pretty much focused on district scale discoveries where possible, as you'll see in the portfolio that I'm about to take you through. Now, the question I ask myself, or the second question, is why is it so few directors of public companies invest in their own propositions? And I think the reason is because they know the odds. When you're running a junior resource exploration company, you understand more than anyone else how difficult it is to make it a success. And from an investment perspective, you can, with the cycles and the swings in valuations up and down, make considerable amounts of money from the space, even if the companies you invest in never find a bean, never find any form of metal deposit discovery, because that's the nature of the markets. But I think if you want to optimize, maximize your chance of success as an investor, you follow the money. And Power Metal Resources is my primary investment as a private investor. I'm a little tired of seeing so little invested by public company directors in their own proposition. So on the screen now, you'll see my purchase history. Now, over the last 2.5 years since we started, I've been a relentless buyer of my own stock. Now, I'm not going to mention this to Michelle, my wife, because she doesn't quite know exactly how much I spent, and I didn't until recently when I had a look at this breakdown. I need, as a CEO in an entrepreneurial market, in an innovative company, to show that I believe my own story. And that's why over the last 2.5 years, I've invested cash. This is not fees being swapped for shares. This is real cash into Power Metal. If this company works, if it delivers, I benefit tremendously. And at that point, of course, I will tell Michelle about exactly how much cash I've put into the company. Moving forward to our business model. So what do I believe in? Well, it's very simple, our model. We've built a range of opportunities. We've acquired over the last 2.5 years, quite a few different projects. They are modest cost, controlled budgets. We know exactly what we're doing with them. We're not overstretching ourselves. We work hard, but we're not silly. And we have control of everything we are engaged with, as you would expect. Now, we started with 3 projects in Western Central Africa back in February 19. We now have those 13 projects across 3 continents. And our plan is to develop, wherever possible, all of our projects initially internally. We want to see what we've got, see what we're handling. And of course, if opportunities come for disposals, we will take that disposal route if it's in our benefit and the benefit for our shareholders. If we decide that we like our projects from an internal development perspective, we will develop them. Now, it may well be that we have a project which is worthy of a joint venture partner, so bringing someone in from outside, in which case we will move to an external joint venture with a partner. But we also have a model where we're looking to vend out certain of our project interests into their own vehicles, building separate IPOs and creating what we think is the potentially tremendous value on our balance sheet. And why do we do that? Well, we think our project portfolio as it stands has the opportunity to make multiple discoveries for the company. If you make multiple discoveries, the cost of operations at those projects increase dramatically. And by vending out some of our interests, building our balance sheet value, we will have the financial capability in-house to stand our ground. And ultimately, if you want to sell dispose of opportunities outside the company for an optimal value, you need to show those potential acquirers that you have the financial capability to take those projects forward on your own behalf.
You're overrunning, Paul.
What's that, sorry?
It's time to go to Oliver.
Yeah. Okay, so there's our global operations. We're going to cover 3 of our projects, and on the screen there is the full project list. Lots of further information on our website, and now I'll hand over to Oliver, who will take you through those project interests.
Yeah, fantastic. Just confirming you guys can see and hear me now.
I can certainly hear you. I'm not quite seeing you yet.
Okay, how's that?
There we are.
There we go. Perfect. Okay, fantastic.
You're looking very fine, Oliver.
I appreciate that. Thank you very much. Fantastic. Well, thanks, Paul. As Paul did mention, I'm going to be going over 3 assets within our particular portfolio today. Now, if there was an asset that you did want more information on, I'm always available to chat. So please feel free to reach out to me on email or Twitter after the fact, and we can definitely get something set up. And I'm going to provide those contact details later. So my goal today, with the limited time that I do have, is to get you excited about the discovery potential that exists on 3 projects within our portfolio where work is currently ongoing. Then I want to mention that these were chosen strictly because we do have crews on the ground. They were not cherry-picked by any means. And I am quite confident that if we were to set up a chat to go over in detail our entire portfolio, that I would be able to get you excited about the discovery potential that does exist on every project currently within our portfolio. And at the end, I'm briefly going to touch on the most recent project announcement, which came out to the market last week, as we've been getting lots of questions about those particular assets. So jumping straight into it, in Botswana, we're going to be talking about our Tati projects. And if you do follow power closely, I'm sure you've noticed a lot of news flow that's been coming out on this particular project. One thing I think that's important to highlight here is the fact that we've been progressing the exploration at pace. So the original option agreement on this property to earn 100% was announced on May 6th. And in less than 5 months, we were able to identify 5 targets based on our historic data compilation. We then initiated a phase 1 work program, which saw the collection of over 1,000 soil samples and 50 rock samples. And since then, we've released those results, and we immediately initiated a phase 2 program, which is geophysics based, which will be wrapping up shortly. So results for that should be coming out shortly. And by the start of October, we are going to be initiating our inaugural drill program on the property, which will see at least 1,000 meters of RC drilling across several of the targets that we've identified to date. As a quick interlude, I think this project should provide a bit of an example as to the mandate that Paul kind of discussed earlier. We bring in generally unloved or undervalued assets into the portfolio at competitive valuations. We then find ways to increase value either through simply holding those assets through to precious metals market, more likely by conducting meaningful laser-focused exploration with the goal of ultimately making a discovery. In terms of the Tati project, however, today I want to focus on the Sekukwi zone specifically, which was previously named the Grid 1 zone. Now, what's particularly interesting about this anomaly is our historic data compilation. So just move on to the next slide there. There's two of them. Yeah, fantastic. So what's interesting about this particular zone is the historic data comp that we did over this area. It highlighted a broad, relatively low magnitude soil anomaly with results up to 23 parts per billion gold. Now, given that we are dealing with Kalahari cover in this part of Botswana, it was certainly an interesting anomaly, but comparing it to some of the other anomalies that exist over some of the gold deposits within the Tati Greenstone belt, it wasn't quite up to snuff. But with that being said, we decided to initiate our high resolution soil sampling campaign. And sure enough, those are the results that you're looking at there. And what's really interesting is not only is the anomaly grown in size, it's roughly 2 kilometers long and 1 kilometer wide, which it remains open in multiple directions, but the magnitude of the soil results increased significantly. Now that main core that you see running in sort of a northwest southeast direction, that's roughly 100 parts per billion gold. And in the northern part of the property, you're actually seeing a single result that was 1,600 parts per billion gold. So I think this should highlight the discovery potential that exists here. Another thing to quickly note is the gold source zone. So there is very limited outcrop in this particular property, but we were able to get some samples from a small area that was outcropping, and sure enough, we were able to grab some high-grade gold samples. So obviously that bodes really well for the rest of the anomaly. And as I mentioned, we're going to be drilling this target and other targets within these projects starting in October. So we're going to have more news on the phase 2 results, as well as the outlining kind of the drill plans in the next couple of weeks here. And then moving on to Patterson here on the next slides. As you might have noticed, we also announced that we've conducted or started our phase 1 work program early last week. Now I put out a few short technical videos on this particular project. But I think it's important to go over the details once again, because it's a bit of an abstract geological target here. And I think it's really important to understand what our sort of main target or what our main focus is that we're testing. Now the analog, moving on to the next slide there, the analog that we've been using is Greatland Gold's Havieron discovery, and which I'm sure many investors watching today are quite familiar with. And the reason that we're using this particular discovery as an analog is because Havieron was made or discovered by drilling a geophysical anomaly that ended up being located below roughly 450 meters of post-mineral sedimentary cover. So because of that, when we acquired the project, the first thing we did was to acquire multiple historic geophysical data sets. And luckily, we had really good coverage over the Walal tenements. And to our excitement, we actually discovered 3 isolated magnetic bullseye-shaped anomalies that you will see on the map in front of you. So to the west there, it's the western anomaly, the eastern anomaly, and then on the border with Rio Tinto is the border anomaly. Now, obviously, having a geophysical anomaly is encouraging, but we need to do a lot more work before we can go ahead and drill these. So the work program that we just started is a reprocessing of some historic 2D seismic lines that run over the western anomaly. And then we're going to be conducting some passive seismic lines over the eastern and border anomalies. And by overlapping these data sets, we're able to get a good idea of the depth of bedrock that we should expect on these those geophysical anomalies. It's also worth noting that I was actually speaking to a geologist about Havieron the other day, and he mentioned that what was particularly unique about the Havieron discovery was the fact that there was a coincident gravity high anomaly associated with it. So what I did is I pulled up some of the historic gravity data sets over the eastern anomaly. And sure enough, there was a bullseye-shaped gravity anomaly as well that was slightly offset. So I thought that was quite an encouraging development that I thought was worth sharing today. And then finally moving on to our Othia North project, which is an acquisition that we made relatively recently into our wholly owned subsidiary, Power Canada. Now, once again, we've initiated our phase 1 work program late last week, and we currently have crews on the ground as we speak. As you'll see on the map here, I'm just highlighting areas A, B, C, and D, which we'll be focusing on for this particular work program. So target areas B and A, and kind of the northern part of the property there. The idea is that the Sayona lithium-bearing pegmatite dips towards the north. It remains wide open. So obviously, we're testing for sort of the down dip extension of that pegmatite underneath our property. And another kind of interesting development here is I was actually looking through the Quebec, it's called the SIGEOM database, which is kind of an online repository of geological data. And I noticed a single drill hole, and you'll see I've marked it on the map there as a little star AU 1224, which was a hole that was drilled in 2012 to about roughly 90 meters. And it actually intersected, I looked at the geological logs, it intersected multiple pegmatitic dikes within that 90 meters. So obviously that gives us further encouragement that potentially we are looking at the same geology, and it does dip undercover on our property. So I thought that was definitely worth noting. And obviously another thing to point out here is the fact that Sayona is about to put that mine in production in 2023. Obviously the best place to look for a deposit is as they say, in the shadow of a head frame. So considering that the Sayona lithium-bearing pegmatite is sort of the outcropping at surface, it was sort of the low-hanging fruit. So most of the work historically was focused on delineating that target. But very little work has been done sort of immediately around that. So we're the first company to come in there and conduct meaningful exploration on some of those satellite targets, which is really exciting. And then finally moving on to an acquisition that we put out last week, which generated quite a bit of buzz. I want to mention that uranium is a commodity that Paul and I have been targeting for some time now. It's not something that we just jumped on in the last 2 weeks since the price started to move. We've actually been looking at a few other uranium assets worldwide, particularly in USA and Australia. And with the recent sale of our Ontario assets out of Power Canada, we felt like it was a really good time to expand our strategic green metal business in Power Canada. So with the recent price moves, they kind of came before we were ready. So it made fully executing our strategy a bit difficult. So we kind of had to be quiet while we staked the ground that we've been targeting for some time now. But we're happy to say that we did target some really great ground, and we're really happy with our particular land package. And what we're going to do is we're going to announce some further details on this package in the next couple of weeks here. And I think it's also important to note that uranium bull markets, they tend to be quite choppy, but ultimately we're bullish on uranium going forward in the medium to long term here. It's just another piece that we wanted to add to our portfolio, and I think it's important to have exposure here, and particularly in Saskatchewan and in the Athabasca Basin, which is one of the best uranium one of the best places in the world to be looking for uranium. And then moving on to, I think that's the final slide there. So just the contact details. As I mentioned, please feel free to reach out to discuss any of these properties or anything else with Paul or myself. We're always happy to chat.
Okay, Oliver, fantastic. Thank you very much indeed for that. Let's stay with the Ophir North Lithium project, given that's where we're at. Was the decision to acquire that prospect, was it influenced by the announcement in January 2021 that neighbours Sayona were announcing a strategic partnership and offtake agreement with Piedmont Lithium? So are you interested in that the proximity to a successful?
Of course, yeah. It's a neurology thing, right? And we were quite surprised to be able to get such a large land package immediately surrounding Sayona for the price that we did. So obviously the success they're having there is a big part of this. Ultimately, our goal is to find lithium-bearing pegmatites on our ground. And if we are successful in doing that, I think the re-rate here on this particular asset could be quite substantial.
Okay. One for Paul. You've lost your chairman. A gentleman called, let me skim through all my questions that I have pouring through here. Andrew Bell. Zephyr Karashi asks, with the departure of Andrew Bell, do we already have someone in mind, a new chairman in mind? And how quickly do we expect to fill this important role?
Okay, so I have to say, first of all, that Andrew has been absolutely essential to the building of this portfolio over the last 2.5 years. He's done an incredible job. He's ballsy and determined and prepared to take risks. And also, the positive decisions that are needed to grow this type of portfolio. We haven't lost him. He's working with us for at least a further 12 months. He stepped down from the board position because we have a tremendous opportunity in Red Rock, Australasia, which is now, of course, changing its name to New Ballarat Gold Corporation PLC. He's planning to list in London this year. And there's huge amounts of effort going into that particular spin-out vehicle, as it were. And we think, collectively, that it needs a lot of focus. He also has Red Rock Resources, his other public company. So he hasn't gone anywhere. He's, working with us. I'm delighted he's given us so much time over the last 2.5 years. We will fill the position as quickly and efficiently as we can, but most importantly, with the right person.
Okay, Susan Waite says, obviously you're going to continue leading the company. Presumably no interruption in progress while a new chairman is on. Is one really needed?
Well, you have to have a chairman, really, if you're a public company. Ideally, you want to have a split chairman and chief executive officer role. Yes, you do. You have to have one. I am leading the company. I've been privileged to do so for 2.5 years. I'd like to keep going for some while longer. I am dependent on shareholder support. It kind of helps that I'm the largest shareholder in the company, of course, but we are building something incredible. We think we have an amazing team. Look, I see the quality of Oliver tonight, his presentation, his know-how, his drive and determination. There are, lots of other people within the team. We're hugely excited. We're on the cusp, Donald, we think, with all these exploration programs, all these drill programs planned, of those major metal discoveries with a little bit of good fortune.
Okay, let me throw back to Oliver. And let me ask you a question, Oliver. What is it that an exploration manager actually does at a business like yours? What's your day-to-day?
Well, it's pretty busy. My background is I'm a geologist, obviously. More specifically, I come from a consulting background, so I help manage and I ran a consulting company back in Canada. Our mandate was to do efficient exploration on the ground, make discoveries, and obviously make sure that clients' sort of needs were being met. So that's a great segue into what I'm doing here at Power. Obviously, with such a large portfolio, it's hard to sort of manage everything. So don't think that I'm doing it all myself. So for each particular project, we have an in-country project partner. We typically like to pair up with someone who's quite well-renowned or is quite somewhat of an expert in that particular area. So essentially, my job is to liaise with all these different people. They know the different jurisdictions better than I do. In some cases, especially in Africa and Australia.
Are you essentially managing those relationships?
Exactly. Yeah, exactly. So I manage those relationships. I keep an eye on budgets, and obviously I'm ultimately making decisions with Paul on how we push our exploration forward. But it's a busy job, I'll tell you that for sure. But it's fun. It's a lot of fun.
Okay. Tati Greenstone Belt in Botswana. We often hear the term Greenstone Belt when companies talk about gold prospects. So what's the significance of Greenstone Belt?
Yeah, so greenstone's a geological term. It just refers to a level of metamorphism. And I won't go into too much detail there, but essentially all you need to know is the fact that these are essentially areas where you're typically going to find greenstone-hosted gold deposits. They're some of the most prolific kind of areas to look for gold in the world. The Abitibi Greenstone Belt in Canada is a good example. So it's a great place to be looking for gold, as you can probably see in one of the previous maps there. This particular greenstone belt has multiple active gold mines, so it's a great place to be working.
Right. Okay. And to Walal, close to Havarian in Patterson, the magnetic bullseyes at Walal display similar characteristics with Greatland Gold's Havarian. Expand on those similarities. Are you keen on one because Havarian, obviously, with Greatland Gold has been such a great success, and you think you can replicate that success?
Yeah, that's a really good question. And I think kind of what I announced today, or what I alluded to today, was another kind of important development there. Obviously, when you're looking for these targets undercover, there's sort of limited amount of exploration data that you're able to acquire. In this case, we're going off the fact that there is obviously the mag anomaly. And in terms of magnitude, so that's something that's, I think, is in our presentation that you can find online. The actual magnitude of that anomaly, which is how magnetic that rock is very, very comparable to Walao. So that's obviously a really good indication. And obviously the size, it's almost an identical size as well. Now, these are two important factors, but obviously there's a lot more that goes into this. I think the coincident gravity anomaly is an important development here. There's lots of geophysical mag targets elsewhere within the Patterson province, a lot of them which don't have that coincident gravity high. So just another kind of geophysical comparison that lead us to obviously make that analog. But obviously, ultimately, we got to test these with the truth machine, and that's with the drill. So we're doing everything we can to prove these targets out, make sure that they are viable. and then we'll announce more to the market about what our plans are in terms of a drilling campaign on Malal.
Okay, uranium. You put out an RNS taking on exploration licenses for uranium in Saskatchewan, Canada last week, and the share price jumped 13%. So why uranium and why Saskatchewan?
Yeah, good question. I think I touched on this a bit, but I can definitely go over it again. As I mentioned, uranium is something that Paul and I have been looking at for quite some time now. As you noticed in the power portfolio, we are very diversified. We like to have exposure to lots of different metals that we are bullish on in the medium to long term. Uranium is definitely one of them. I really think the fundamentals here are in favor of a really good uranium bull market here and a sustained increase in the price. And then in terms of jurisdictions, we were looking at lots of different areas, as I mentioned. Typically, the deposits in Saskatchewan are much higher grade and more profitable than anything you're going to find elsewhere in the world. There are some deposits, obviously, in sort of the Western Asian, in the Kazakhstans and whatnot. We're obviously not going to go in there, but in terms of really good jurisdictions, Saskatchewan's one of the best in the world. I know Canada well, and I know the different consulting companies that work out of Canada well. So it was a natural fit, and we were able to get in there with a relatively low price tag. And once again, it's one of the best places in the world to work, and more importantly, it's one of the best places to find high-grade uranium.
Great, thank you very much indeed to you, Oliver. Last question of the evening to Paul from Richard Tansley, who asks, how are you going to finance all these projects, especially when you make a discovery? So when it gets big, how do you sort out the financing?
Yep. Okay. So we touched on that earlier, which is we create our own wealth. I've spent 10 years restructuring and refinancing lots of different companies. I've stopped that work outside, and I'm now doing that work inside of Power Metal Resources. We will build our own project base, build our own vehicles that we will spin out onto listed markets theoretically around the world. That's one area that we generate wealth. We have investments. We invest as well. It's only a small part of our business, but it's been quite successful, as is in the public domain, and that generates wealth. We have significant, robust underlying working cash positions at all times. I'm an accountant. I'm worried about risk. I'm worried about money. I make sure we're in a good position, and we are today in a good position. We were 3 months ago, 6 months ago. And by building our balance sheet to what we think can be quite a tremendous amount, we will be able to stand our ground. We will be able to fund and finance our own programs. We won't have a gun held to our head at any time, and that's absolutely vital. So we're going to finance it using our own capabilities and growing our financial strength.
Paul Johnson, CEO at Power Metal, thank you very much indeed. And also thank you to Oliver Frisson, the Exploration Manager. Thank you for joining us tonight. That was absolutely fascinating. Thank you so much.
Much appreciated, Donald.
No, the pleasure was ours. Now, next to present is Tom Reynolds, who also happens to be a non-exec with Colin Harrington at Zephyr Energy. So the world is a small one tonight. Tom Reynolds' day job is actually running Churocco Energy in his own right. Now, Churocco Energy is an AIM-listed investing company targeting assets within the European energy market. It has recently taken a 50% interest in Energy Acquisitions Group, or EAG, a specialist operating vehicle, which gives Churocco access to a pipeline of already identified acquisition opportunities within the rapidly growing UK anaerobic digestion and biogas market. More of that, I'm sure, from Tom. The company also has legacy assets, including 25% of the Ruvuma license, which is gas in Tanzania, if I remember correctly, and also a 1% holding in AIM-listed Helium-1. Here tonight to tell us more is Tom Reynolds, CEO at Churocco Energy.
Hi there, Donald, and thank you very much for that introduction.
My pleasure.
So, and listen, thank you very much for the opportunity to come and talk to the London South East community this evening. Very pleased to be here and really reintroduce Scirocco Energy, which I'm sure some of your constituents have been familiar with through its recent past as it transitioned from Solo Oil to Scirocco Energy. And really, I'm looking to catch people up here. And there's probably three themes I'd like to be able to listen out for, or questions I'd like to answer through the course of this evening's presentation. The first is why we're doing what we're doing. The second is the how that we'll roll out our plan. And the final thing is, what are we building in terms of the business machine? And hopefully, if I answer those three questions as we go through this evening, I'll be delighted. So moving on to the next slide, very briefly, we've got a disclaimer here, which is important to read at your leisure. But effectively, it means that none of us really know what the future holds, and that any forward-looking statements should be taken into account of the uncertainty that we all live in. So moving on to the first section, and what I plan to talk about here is the Scirocco Energy overview, and principally to talk about why we're doing what we're doing, and also how we're going to do that. So moving on to the next slide. Scirocco is in itself an energy company in transition. And I think, you can't pick up a paper, you can't look at a website without reading something about energy transition. And Scirocco has been going on its own journey over the last period of time. And what I've tried to do here is just summarize for the viewers where the company was, where we are today, and where we're going next. And where we were before, particularly under the banner of Solo Oil, the company was invested in a fairly diverse portfolio of natural resource assets, typically quite early stage with high potential reward, but high risk. And because of the nature, location, and the process involved in those assets, there were uncertain timelines to get to a valuation point, and also the associated funding requirement. What we've taken as a board is action to move the company towards a more predictable and manageable future. So where we are, we've made our first investment in the renewable sector in line with the new investment policy that was approved in July this year at the company's AGM. That was funded by recycling proceeds from the partial sale of our position in Helium 1, a historic investment in Tanzania in helium potential. The Rovuma license has been extended and the operational plans clearly established, and we'll talk about the Rovuma in more detail. And we've started, as people will know that are familiar with the story, a process to monetize those legacy assets further so that that value can be recycled into the new investment profile. So where are we going? There's a vision for the company. It's to create a diverse portfolio of real assets, things you can touch, that are cash generative within the sustainable energy space and the circular economy sector. And they will deliver return through hard cash that's generated. And that cash is available for distribution or recycle into purchase of further assets, which I think is really important. So the 3 to 5 year vision that's summarized at the bottom of the slide here, very clean: manage the legacy assets for value, recycle that value into new investments in the target classes I'll talk to on the next slide, and grow that portfolio value by applying both shareholders' equity, recycled cash, and asset-based finance to create a very significant asset base with strong cash flow. So let's look at the asset types and classes in the next slide. So fundamentally, we're playing in the energy space. This is a market that the board knows well, and we're focused on 3 pillars or 3 target asset classes, it says on this slide here. The first is energy. So these are assets where the primary function is generation of energy from renewable or sustainable sources. The second target class is circular. And these assets, basically the fundamental purpose is to recover valuable co-products from waste streams that can be municipal, industrial, or agricultural waste streams. And typically what those processes also involve is the reduction of the carbon footprint of those larger systems as you go about that recycling activity. And then the final piece is vector. And these are assets that are involved in storage, transmission, and delivery of energy within low carbon systems. Anything to do with battery storage, grid peaking, or hydrogen as a class would sit within vector for us. And as I've said already, our strategy is to accumulate a portfolio of real assets that are cash generative, recycling that cash into buying more. And that's what this graphic in the bottom left of your screen is showing, that we will select assets, acquire them, leverage them, and recycle cash flow into the next. And I think I can talk about that in more detail on the next slide. And this really is intended to talk to the how. So how are we going to do this? So fundamentally, we plan to build platform investment businesses in each of the target classes that we just talked about, and partner with management that have deep domain knowledge, deep market knowledge in that chosen space, understand where the assets are that can be bought, understand how to drive performance from those assets by optimizing asset performance. We'll help them optimize the balance sheet, reinvest cash flow to both improve the asset and grow value. And then ultimately, it's quite interesting, a couple of questions through the last couple of presentations. You know, we are an investor and we're looking to put money into assets. And if the opportunity comes in the future, turn those assets back into cash on behalf of our shareholders, that's our job to do that. And so, yes, we will sell both assets or indeed the company on a valuation that reflects scale and value at the appropriate point, or continue to build by recycling cash. Graphically, that's shown in the slide in the center here, which I parochially refer to as a flying brick, but a better metaphor is a waterfall chart. And really what you can see here is the asset base building up, assets 1 through 6, adding up to total value, which is made or funded by a proportion of asset-based finance and debt, and the light aqua color of equity. We then look to develop upside in the assets by driving better performance, improving performance, and grow a portfolio of scale which supports some form of re-rate in terms of valuation. The debt still exists, which is the pale blue line coming down, but you can see here the result of that process over a period of time in each one of these value platforms is to create a larger stack of equity. And that's how we will grow value. And as I'll talk to in a moment or two, EAG, Energy Acquisitions Group, that Donald mentioned in the introduction, I think is an absolutely perfect example of this investment model, working in a platform business with an experienced management who really know the space. Very experienced team, strong pipeline of opportunity, great identified path to upside on the assets, and the ability to apply appropriate levels of leverage to the portfolio as we go forward. So the how, for me, this slide says it in one slide. So moving on to the next slide, very briefly, for people's reference, this is the board and management of Scirocco. People who are familiar with the story will recognize most of the names and faces on here. I draw attention to Muir Miller, independent non-executive director that joined us back in late Q1. He comes to us from Peel, and he's got over 20 years experience in the renewables, utilities and project delivery space. And Muir's been really very, very helpful in assisting us and advising us as a wider group as we've transitioned into the space and start looking at new opportunities. And what I would say is that we would expect to build out further competence in the area that we're looking to invest in as we go forward. So I'd expect this slide to get more complicated in a good way, showing that we are building up our team to meet the challenges that we have. So moving on to the next slide, I want to spend a little bit of time talking about Tanzania. It's an important part of the company. It's the legacy assets that we have within the company where a lot of historic capital has been invested. And I'm going to split it into two parts. Ruvuma, which, as Donald said in the introduction, is a natural gas discovery in Tanzania, and Helium-1, which is a helium exploration play also in Tanzania. In terms of Ruvuma, dialogue continues on the sales process that was launched last year, suffered from some delay and deferment because of COVID, along with most of real life for what felt like far too long. And now we're re-engaged with interested parties around Ruvuma. What we have seen is strong interest from a diverse group of companies. And on the asset, recent issues have really helped instigate and support that interest. A very important announcement from my point of view was that the joint venture secured a 2-year extension to the license on Ruvuma with no additional work commitments. The new operator, ARA Petroleum Tanzania, has established a very clear operational plan that takes us through 2022. And they are currently very busy progressing to award of seismic contract, which we expect to be in a position to announce quite soon. And then they're also preparing for well planning for a crucial appraisal well that will be drilled next year. So the project's now entering a period of really quite intense operational activity. And we believe that will unlock value for Scirocco's working interest and for the joint venture as a whole through that de-risking process that we've actually heard the two previous speakers talk about in the context of subsurface exploration and appraisal. What we're doing is we're focused on realizing appropriate value from these assets. And we're balancing the value that we believe exists there against the future capital costs and operational risk factors, whilst recognizing that where we're taking Scirocco and how we want to recycle that value into the new investment policy. So the near-term priorities are very clear on Rovuma. We want to progress dialogue with interested parties engaged in the ongoing sale process. We want to maintain strict cost discipline on the asset to both manage our cash resources and make sure that there's an optimum investment being made in the asset. And that means we're supporting the new operators' operational and development plans because they are intended to de-risk the assets and add value in the process, all of which will be attractive to a potential buyer. On Helium 1, I think people who are familiar with the story will have seen our various RNSs on the story. We've been very open about our sales and our intention to sell down. Helium 1 was a private company until December of 2020 when it listed on the AIM market. And Scirocco has consistently and successively sold into what was a strong market for Helium 1 shares through to earlier in this year. So we've sold 17.8 million of our original 22 million shares when you take account of the options that we exercised. And that has realized net proceeds of £3.5 million. We still have 4.6 million shares. And Helium 1 is subject to its own announcement regime, and they've made very clear that they've got lots of really very good high quality data from that first drilling program, and they're now moving on to the second one and planning for that. So we remain very supportive of what the team are doing there and the company as a whole. Obviously, we've taken the opportunity to take some money off the table, and you can see on the graph at the bottom there the average sale price that we managed to achieve over the last few months. Crucially, I think this is a good example of that recycling proceeds into the new policy. We took some of that £3.5 million and we recycled it into the platform investment in EAG, which basically starts us on a path with that company. And I think that's a really good segue into the next slide. So EAG, our first platform investment, this is the how, and they are operating in the energy space. So on to the next slide. So the EAG investment is a platform business, as I've said. The intention is that EAG will go about their business of growing a portfolio of anaerobic digestion and similar equipment over the period of time, buy a number of plants and go up the stairs of that flying brick chart that I shared earlier. It's a private company, and we've invested to hold 50% of EAG. So there is a chain of events here. Scirocco has invested in EAG, which will invest to acquire anaerobic digestion plants, the first of which is Greenstone Generation Limited, or Greenstone for short, which is the owner of a 0.5 megawatt generation plant in County Londonderry in Northern Ireland. And I think it's quite interesting to look at the numbers here. This year's revenue on that plant is estimated to be about £1.1 million, and an EBITDA, so earnings before interest, tax, depreciation and amortization, a proxy for cash flow of £450,000 a year. So these are meaningful building blocks for the portfolio that EAG are trying to construct. Quick word on the investment. It's a 50% equity investment, but it's structured as a leverage structure. So Scirocco has certain rights, including preferred return and the rights to appoint 2 directors, which is myself and Ewan Miller, who will sit on the board of EAG and assist the company in governance as it grows. So the next steps for EAG once we get Greenstone completed is that they're going to look for more assets to buy. And the target asset characteristics are really run very similarly to the asset characteristics that Scirocco wants to buy, which is sustainable, long-term, inflation-linked cash flows, low market risk, and medium to long-term contracted income, and high operating margins with opportunities to grow. So looking at the next slide, I'll be quite brief here. There's a lot of information on it, but it's really an expansion of some of the details we talked about already on the green plant. I think it's a really great example of cutter type asset acquisition. I think what I'd really like to stress on this slide are a couple of bullets that talk about post-completion activity. And the team at EAG have already identified opportunities to improve basically cash conversion within the asset. First and foremost, by looking at feedstock adjustments, which can deliver around 10% improvement on EBITDA on an annual ongoing basis. And then the second piece that we think is potentially much more impactful is looking at the digestate management equipment that can be applied to turn what's left behind in the tank after you've basically digested and taken off the biogas, and look to turn that into a valuable product. And I think that's a really very interesting initiative that we're going to be exploring as we go forward. On to the next slide. Very briefly, why anaerobic digestion and biogas? Fundamentally, it's a very interesting market within our chosen field. It sits straddling between energy and the circular markets that I've talked about already. And this, in the center of your slide here, you can see that the two products fundamentally biogas, so energy, and then biofertilizer, which is the organic material left behind. And I think there's a lot of work that can be done in both of those elements that can release further value. What's particularly attractive about this market is a large installed asset base, so lots of target assets to get after and buy, broad population, and I'm sure there will be new developments in the future that we could also participate in. And we're basically working with the EAG to identify acquisitions. We're also working with technology developers on that digestate management piece about how we can monetize or otherwise improve the reuse of the biofertilizer that comes off the back end of these plants. So turning to outlook and moving on to the next slide, I think one of the points I'd like to make on really here, the main point I'd like to make here is that we're making headway on all aspects of the strategy. We're doing what we said we'd do. We're recycling value from our legacy portfolio, which we're managing as good stewards of shareholder capital and shareholder value. We are building a new business in the sustainable energy and circular economy space with these three target asset classes. And we've established our first energy platform with EAG, which is getting after it. We're also looking at other opportunities in energy, not just in EAG. And what I'd hope to be able to do in future is come back and talk about further platform businesses we're building. In circular, we've been reviewing JV opportunities within the agricultural waste area. And we've also entered into negotiations with a technology provider for the potential provision of digestate management technology. And in Vector, as we previously announced, we're part of a consortium looking at the feasibility of establishing a hydrogen refueling network in northeast Scotland. So hopefully you can get a sense from that we are moving on each one of these target asset classes. We're doing what we said we'd do. So the opportunity for investment, I think, is pretty clear. This is a strategic pivot to sustainable energy. The JV with the EAG provides a strong example of a growth platform, which we hope to duplicate in other areas. It's linked to underlying reliable cash flow and building a low-risk portfolio of proven assets that will deliver in the long term. Also giving you the opportunity to recycle value into further investments, both from the legacy portfolio, but also the new cash generative assets that we're acquiring. And really just turning to my final chart, I said I would talk about what we're building, the machine we're building. And hopefully this can simply explain it. I'm going to start here on establishing the JV platform. EAG is the example. We team with, we're looking for a team with domain knowledge, large and growing asset market, and supportive fundamentals, which allow us to acquire assets, improve those assets' performance through adding revenue and improving underlying profitability, looking at additional technology levers that we can apply to some of those assets to really supercharge them and improve performance further, generating cash flow which then be recycled both inside, that is at the same joint venture, or recycled via Scirocco into a parallel platform business. And it's no coincidence that this is a sort of virtual cycle and virtual spiral. So we grow from here as we gather momentum and build wider business. And as it says on the left, investing in sustainable energy assets which deliver cash flow for reinvestment. Can't really say it simpler than that. And the final piece is the very important point: repeat. So hopefully that's given you a sense of why we're doing it, how we're going to go about it, and the business, the what that we're building. And so on the final slide, just thank you for your attention.
Okay, Tom, thank you very much indeed. Let me quickly jump in and ask you, in very simple terms, talk us through the different sectors you're mentioning there. I think we're probably all a little bit new to anaerobic and biogas sector, the circular sector, vector. What are these things? I really think if there were marketing people, they really need to get a grip, because if you're going to sell these things into the future, they need better names. Vector, circular, anaerobic, biogas. Tell all, in simple terms, what are we talking about here?
So I think everybody's got a good sense of sustainable energy and renewable energy. I think people understand solar, wind power, basically energy. So effectively the high level model here is you're taking a piece of kit, a piece of technology, an installation that turns natural processes into energy by one route or another. Anaerobic digestion is basically taking organic material and which would normally break down historically in landfills or be ploughed into the earth where it would break down and be digested at a natural timeline. But what you're doing is
not digested by animals, but naturally digested by the soil.
Quite possibly, but digested in the soil, effectively the natural breakdown of organic material. And what we're doing there in an anaerobic digester is accelerating that process in a tank, which you could see in one of the slides, was the picture with the domed roof. You add an enzyme and effectively you cook that organic material that would otherwise be waste material, which forces its degradation in a much more rapid way. The methane gas that is embodied within that comes off, you gather it, and it can be injected into the gas grid as cleaned up natural gas. Or it can be put through basically a turbine to generate electricity, and you export power as your main product. Greenstone, as an example, exports power. So basically, you're cooking muck and organic waste to produce methane, natural gas, via a different route that the North Sea did over millions of years, buried under megatons of sediment. And it all counts as green energy. And it counts as green energy because one, the process is a naturally occurring process that methane would otherwise be released into the atmosphere, into the environment, and therefore you're capturing it, you're accelerating it, capturing it, and using it for beneficial purposes. So okay. And a circular and vector, those two different areas? So a circular is fundamentally about recycling and recovering value where things are effectively wasted or sent away to landfill or otherwise not used. And there's lots and lots of different examples. Circular is the circular economy is a sort of trendy name for it. But fundamentally, you're talking about waste management and recycling. So recycling valuable components from waste streams, as I said, whether those are agricultural, municipal, or industrial, and making those recycled components available again. So frankly, they don't have to be dug out of the ground, or they don't have to be found again. And then finally, vector, again, fancy name for transmission and storage. We all know that the intermittency of the grid being driven by sustainable and renewable energy means that we need more capacity that can balance the grid demand, and that comes in the form of better, more interlinked transmission, storage at various nodes on the grid, and also looking at other energy carriers like hydrogen, all of which fit within vector. Okay, fantastic, Tom. That makes a lot of sense. Thank you. When you put it in those terms, it actually makes a lot of sense. Chris Perkins asks, taking you back to the future, unfortunately, back to Rovuma. Now that the 2-year license has been agreed and the production program is in place, what would your market value be for Rovuma? Our market value for Rovuma, I mean, I think This is, I mean, we're right in the middle of a sales process, so I think we have to be very realistic about what we're trying to achieve, and it wouldn't be appropriate for me to put a number out there when we're actually actively in conversations with counterparties. I think what we have said in the past is we've taken a look-through valuation based on what other people have achieved, and that's well documented on both of our presentations and historic presentations and RNSs in the past, that we have implied or backed out a valuation of around $20 million for the Rovuma based on the Aminex and ARA Petroleum transaction that happened before, when ARA farmed into Aminex's interest on Rovuma. Now, obviously, the asset is moving forward. We've invested further capital, and we're moving forward onto an appraisal program, which the more we get into that, the more information we have on the asset, the more the asset is de-risked and understood better, and the value of the asset increases as a result. So that process is not lost on us, and it's certainly not lost on the counterparties we are dealing with.
Okay. How long before you get that 20 million back out of the process, do you think? And is that an unanswerable question?
I think today it's a tough one, right? And I think we just have to be honest. We are engaged with counterparties that have got both. They are qualified counterparties in as much that they are funded, they are competent, capable, and they have both an expressed and clear beneficial interest in getting involved in the project. So they tick all the boxes as bona fide counterparties as you look at that. We are dealing with a regime that takes a little while to get things done. We saw that Aminex and ARA's transaction took a reasonable amount of time to get.
Things take a wee bit of time to get processed in Tanzania.
And so right now I'm waffling around an answer to this, but it's because it's pretty difficult to put the pin in on it, right?
Not a problem. Not a problem. Let me stop you there then. Matt Smith says, Tom, are you tempted to buy back into Helium One?
It's a good question. The trader in me says that the market's temporarily taken capital and reallocated it elsewhere whilst Helium One are getting ready, and it feels to me that as they get into their second drilling operation, more interest will come back into the stock, and it's my not investment advice, it's just my personal view as a trader that valuation is likely to improve, but I would not be buying back into Scirocco's money. It's a one-way journey for us.
Okay, my final question, and it's not a nice question, but I've deliberately left it to the end. I've got lots and lots of questions from quite grumpy shareholders who say that in the time that you guys have been around, you haven't done enough with the business. How would you respond to them? Not a nice last question, I accept.
No, and listen, it's each of those shareholders are owners of the company, and it's an entirely appropriate question for them to ask. So the current board basically joined through the back end of 2018 and the first half of 2019. People who have followed the story will be familiar with a natural gas, European gas market story that we developed through 2019 and really tried to put into action in late 2019 with the planned acquisition of some gas assets in the Netherlands. Now that did not happen. It didn't happen for very clear reasons that we've talked a lot about in the past, but fundamentally, we saw a very significant reduction in gas market prices in Europe, which undermined the benefit and the path for the transaction. That caused
you feel completely sick looking at the gas prices today?
But it's a cyclical market, right? But you have a certain period of time, and if we own those assets today, but if I think the key point is, what do we learn from that experience is, company in Scirocco's position had to take a step-by-step approach to building an asset portfolio, and hopefully people can see that in the portfolio, in the policy that we've put out here. We can build a very large portfolio that generates a lot of cash flow and recycles a lot of cash flow from bite-sized assets that are entirely within our reach in a market that is very broad and a lot of supply, working with very capable teams. And yes, it's taken us a little bit while to get there. And we had a false start with the Netherlands plan and the natural gas plan. And we did have a global pandemic, and everybody's going to be able to throw rocks at that. But it kind of put the world on hold for somewhere between 6 to 9 months.
It did indeed,
I'm not really sure I can take full responsibility for that.
We're completely out of time, so I'm going to put you out of your misery by saying we're going to go on to our next business now. Tom Reynolds, CEO at Churocco Energy, thank you so much for joining us. Thank you for asking that difficult last question. Really very, very grateful.
Thank you.
And our final company this evening, our pharmaceutical and healthcare company, SpectrumX. We're leaders in proprietary formulations of HOCl. You may not have come across HOCl, it's hypochlorous acid. It's a naturally occurring substance in human and white blood cells, which defends the body against foreign bacteria and viruses. Through their partnership with Spectrum Antimicrobials in California, it is licensed to use their unique formulations. They have a main market LAC listing planned for mid-November, I believe, valuing the company at around £50 million, conservatively, said Damian when he spoke to me a week or two ago. So it's a really interesting opportunity for you to hear from them pre-IPO, and here is CEO Damian Hancock to tell us more. Damian.
Evening, Donald. Thank you very much for having me back again. As Donald says, my name is Damian Hancock. I'm CEO at SpectrumX. I'd like to take this opportunity to run you through our exciting business prospects and to educate a bit more about this wonderful chemical that we have access to in hypochlorous acid. If we move forward to slide 2, just to give you a bit of a background. So we are a UK-based pharmaceutical and healthcare company focusing on utilizing and exploiting the chemical properties of hypochlorous acid for various different applications. Specifically for our first 2 launch products is a extremely efficacious hand sanitizer, as well as a unique respiratory infection treatment. Moving on to slide 3. I'll go into all of these points in a bit more detail later in the presentation, but essentially want to outline the opportunity as it stands at the moment, explain a little bit about the extremely high growth sectors in which we're operating, explain a bit about our route to commercialization and our roadmap that we've set out, and then finally where we are up to with our pre-IPO fundraising as it stands today. On slide 4 here, as Donald mentioned, so hypochlorous acid is essentially the backbone of the human immune system. Without it, humans would not still be alive today, because it's the forefront of fighting against all bacteria, pathogens, viruses when they present inside the body. It's the chemical that the white blood cells release to kill off those infections inside our body. It is the most powerful disinfectant known to man. It's around 300 times stronger than bleach, and yet safe for use on human skin, safe for inhalation, safe for use around the eyes, etc., etc. One of the most unique properties about it is that it's a positively non-selective mode of action, which means it still remains its efficiency against superbugs, things like MRSA, ESBL, which are extremely problem causing, especially with relation to hospital-acquired infections. Moving on to slide 5. We began our partnership with Spectrum Antimicrobials in the United States in the early part of last year. Our partner CEO, Hoji Limi, has been working with this chemical compound for over 30 years now, and really is the preeminent authority on the chemical globally. He has been developing patentable formulations which have never previously existed, which is obviously the key to being able to commercialize the product. He holds in excess of 30 patents with regards to HOCl, and recently made a breakthrough chemistry discovery, which was essentially to create a shield around the HOCl molecule. HOCl is inherently a very weak chemical bond. It's very easily deactivated, specifically when it comes into contact with what we call serum, so organic matter, things like blood, sweat, pus, things like that. So for use in a pharmaceutical hospital setting, it's essential to be able to dose the product correctly, which is why this technology, which they've developed, is such a breakthrough. And additionally, they are the only company in the world to have been able to patent an end product formulation rather than a process pattern of how you make HSCl. So it's an extremely exciting and groundbreaking breakthrough that they've managed to achieve. Moving on to slide 6. As I mentioned, so the first 2 products that we're bringing to the market in the UK and Europe are our SpectrumX hand sanitizer. This product is already an NHS approved sanitizer. It's currently being used in 2 hospitals. And over the next 3 or 4 months, we will be rolling out to a significantly larger number of hospitals once our UK-based manufacturing comes online. And then perhaps more interestingly for investors out there tonight is our SPC069 inhalation treatment for all respiratory infections. I'll come on to in a moment regarding trials which we're about to conduct in relation to this product, but it does really have a very bright future as a possible treatment for a whole range of respiratory infections. Moving on to slide 7. So to begin with, I'll talk a little bit about the commercialization strategy which we're implementing for SpectrumX. Currently, we are in the process of converting hospitals across from traditionally alcohol-based sanitizers. Alcohol-based sanitizers are inherently flawed in that, you know, they cause damage to the dermal layer of the skin. Obviously, with the pandemic coming along, people are using sanitizers more and more and more, and are finally starting to see the harmful effects of overexposure to alcohol on the skin. As I said, we've moved into 2 hospitals to start with. We gained our approval to become an NHS supplier for this product in November of last year. Additionally, obviously, because the product contains no alcohol, we have received an HCE halal certification for the product, which opens up various possibilities to us, both in the UK and Europe, and in the future outside, particularly focusing on Middle East and Malaysia over the next 12 to 24 month period. Moving on to slide 8, this gives an idea of the size of the market. Clearly, as I mentioned, the use of sanitizers has skyrocketed now, and it doesn't appear that that's a trend which is going to be reversed. We expect that the European market to be circa 1.5 billion within the next 4 years. It's currently dominated, as I said, by alcohol-based products, but there is very much a move towards understanding efficacious alternatives to alcohol to remove any sort of risk factor attached to the use of those products. We see demand currently from NHS hospitals, private hospitals, care homes, particularly schools, given the inherent dangers of having alcohol around children. Obviously, everyone's kids now at schools are required to use sanitizer on a daily basis, multiple times. Also, we are starting to see a dramatic increase in skin conditions in children as a result of overexposure to alcohol sanitizer. We're also starting to see very unfortunate things like hospitalizations through ingestion of alcohol sanitizer. We very much believe that, given that we have a very viable, potent alternative to alcohol, that there's no reason why children should be exposed to alcohol at such an early age, and all the potential hazards which come with that. Moving on to slide 9, so this is just a bit of validation. This is a quote from Gary Davis, who's head of the Chelsea Westminster Hospital. They were the early adopters of our products, very much because they started to see a huge number of their staff ending up in the dermatology department with things like psoriasis, eczema, cracked hands, very, very, very nasty ailments, considering a lot of healthcare professionals rely upon their hands as their main tool, as it were. Moving on to slide 10, as I said, perhaps of most interest to the investors out there, a little bit about SPC069. So it is the first pharmaceutical product based with an HSCl as an active, aimed at treating respiratory infections. The product is deployed through a nebulizer, essentially vaporizing the liquid, producing a very small particle, roughly 2 microns, which is small enough to enter the upper and lower respiratory systems. And further on in the presentation, I'll show you what some testing results we've received recently showing the efficacy of the product and the extremely exciting potentials of that. The active ingredient in the product is HOCl. It also contains hydrogen peroxide that allows the oxygenation of lung tissue for the HOCl to essentially get to work where it's needed. Moving on to slide 11. So we've got various different projects which we're working on at the moment. Most importantly is the trial which we're supporting at the University of Innsbruck in Austria. This is going to be a double-blind placebo trial against COVID-19. We're going to enroll 240 patients. 120 will be treated with SPZ069 and 120 with a placebo. Roughly a month ago now, we had our initial in vitro testing results back. There is a short extract on the right-hand side, the chart you can see there. So that is relative neutralization or destruction of the COVID-19 viral particles. Industry standard for exposure time for these tests is 60 minutes. So that's where we started. We received those results back, which was 100% neutralization of alpha, delta, and wild type COVID-19 virus particles. We then did something quite ambitious, which is not traditionally done in pharma world, in that we went exceptionally aggressive with our testing time in terms of the ultimate exposure to our product of viral particles. We brought the exposure time from 60 minutes all the way down to 60 seconds. And as you can see from that bar chart on the right-hand side, after 60 seconds, we achieved 100% neutralization of COVID particles. So clearly that was very, very exciting news for us, for the company, additionally for the doctors and the professors at the hospital, who are very much looking forward to getting the trial started imminently. One of the other key elements we tested in those in vitro tests was toxicity, cytotoxicity, and we've also come back showing that there were minimal effects on healthy lung tissue, and therefore no issue whatsoever with moving forward with the human trial. And in fact, it was recommended that the product is to be used against human lung tissue. Moving on to slide 12. Just to give an idea of the market size. So on the right-hand side, as you can see, the expectation is that the EU respiratory market will be worth circa 6 billion by 2026. We expect to play a very big part in the supply of that market size. As we're all aware now, COVID is not going anywhere. We're starting to see, second, third time infections in individuals. And even though the vaccine rollout, especially in the UK, has been particularly productive, no vaccine is 100% effective. But there are also parts of society who are immunosuppressed or not able to have a vaccine. So we believe that vaccines and effective treatments have a long-term future sitting side by side. Additionally, we are very concerned that this winter could see the most deadly flu season on record. Part of the reason behind that is that obviously a lot of people have been shielding, social distancing, essentially staying away from each other for the best part of 18 months. So the natural antibody levels and natural immunity which we have against the flu virus is probably at all-time lows. So we are starting to see already seasonal infections, which would normally occur from sort of November to February or March, where you're already starting to see patients hospitalized in June, July, August with pneumonia, influenza, flu, etc., etc. Moving forward to slide 13. Now just touching a little bit on the basis of what we've been using our proceeds of funds thus far. We have currently raised circa 5 million of our 8 million pre-IPO funding. We are using that to support 2 different clinical trials, one of which I mentioned, one of which I'll come on to in a moment. Additionally, we have started the build out on our production unit in the northwest of the UK. That will house 2 different production lines, one ISO 9001 HSE compliant line for producing our sanitizer products, and then the more ambitious, larger project, which we're going to start circa December this year, which is going to be our MHRA fully compliant pharmaceutical production line. We are also in the process of rapidly expanding our professional team. So we are using some of the proceeds for that. And then additionally, our partners in the US have multiple other products which show promise of being commercially viable. So we are very keen to start to move to expand our product line with them and bring some more products and some more pharmaceutical products specifically to the UK and European markets. If we would just like to press play on the video now. This is a time-lapse video just showing in the northwest. What this shows is phase 1. So this is a class 8 clean room, which is where we will produce our sanitizer products. We are aiming to be in production week 4 October. We've rented a 16,000 square foot space there, so we've got plenty of room for expansion. Ultimately, we will have circa 7,000 square foot of clean room spaces of varying different grades, moving all the way up to completely sterile fill and finish capabilities, as well as distribution systems, etc., from the northwest. Moving on to slide 15. This gives you an idea of milestones where we are. We have achieved various milestones over the past 6 to 9 month period, but essentially the sort of exciting part of the business is just upon us now. As Donald mentioned, we are targeting a London listing in week 4 of November this year. Within the next 3 months, we are expecting initial trial data back from our Austria trial. Obviously, given the in vitro results we've received, we're expecting that to be extremely positive. Within the next 3 months, we will also complete the phase 1 of the production facility you just saw, and will be essentially be a UK-based manufacturer. We have been importing product to date from our partner in California, which is a very costly and very time-intensive project. Therefore, we have immediately moved to build UK manufacturing. And then I won't go through all of these, but within the next 3 to 6 months, we would anticipate receiving the final trial data from Austria. At which point we have already started the preparation for emergency use authorization filings for SPZ 069, both with the EMA for Europe and the MHRA in the UK. And as I mentioned previously, within that period of time, we will also start the build out of our full pharma production facility, including those various different clean rooms. Moving on to slide 16. This is a part of the business we're very, very passionate about in terms of our ESG policy. Our ultimate aim is to be the first carbon neutral pharmaceutical manufacturer in the UK. We're well on our way to that. We've got various different schemes we've put in place already. Things like water recapture, things like eventually solar panels on the roof. We've rented a building with exceptional energy rating systems, so we hope to keep energy consumption to a minimal. Additionally, the main ingredient of our product is essentially purified water, so we are in an excellent position to move towards that carbon neutrality. Moving on to slide 17, just a bit about some of the team. So you've got myself there. We're very happy to recently welcome Aziz McMahon as Executive Chairman. Aziz has recently left from Goldman Sachs, where he was extremely successful over a 14-year period. He brings a wealth of experience, particularly in the ESG and corporate governance fields, and we're very lucky and very happy to have him on board. And moving forward, he will be an extremely key part of the business for us. Then we've got Derrick Brown. Derrick Brown is a consultant who works for us Derrick is head of our product development, product launch program. He has an exceptional experience record in the pharmaceutical industry. He's launched over 600 products over the last 30 years. So clearly bringing our product to market in the most expeditious way, he's going to be also very key to us. Finally, we've got Lord Shrewsbury. Obviously, a lot of the projects that we are working on are of particular interest to governments around the world. Being a UK company, obviously, we're focusing initially with the UK government. He's our conduit to things like the Antivirals Task Force, which is a government task force set up to develop efficacious antiviral treatments, which can be used in a home setting, of which we believe SPZ069 will be one of them. He is also leading our Say No to Alcohol campaign, which is for the removal of alcohol from schools, as I mentioned before. And then finally, we're very excited that imminently we'll be announcing the appointment of a CFO to the group. He has previously acted as a CFO for an AIM-listed pharmaceutical company for about 4.5 years, brings a wealth of experience from both pharma and public companies to the table for us. In summary, this is obviously a unique opportunity for investors, as Donald mentioned. I don't think you often have pre-IPO companies attending these webinars, but so thank you very much for having us. Hopefully you've got a little insight now into hypochlorous acid and the huge potential which we see both in the healthcare and pharmaceutical industries. Right, Donald, that's it from me.
Okay, thank you very much indeed, Damon. You're absolutely right. We don't often have pre-IPOs. You are our first. Well worth it, I have to say. What a great company.
Thank you.
Can I strike a deal with you, Damon? I'm going to crack through lots and lots of investor questions and then come back to 2 or 3 of my own. Is that a deal? Just
Yeah.
so I'll quickly ask you questions and you quickly give me answers.
Go ahead.
Okay, Richard Hackett asks, how long is the current UK and European exclusivity deal with Spectrum antimicrobials, and are there other territories likely to come on board for Spectrum, for example, Asia, North America, and so on?
So it's for the lifetime of the patent of the product, so 22 years until the product becomes generic. So it's actually for the lifetime of the product, but specifically important for us is the lifetime of the patent. Expansion plans, yes, we have those. As I alluded to in the presentation, the product is 99.9% water, so local production is an absolute essential. So yes, our intention is to roll out a second production facility somewhere in Southern Europe. We believe that we can serve most of Northern Europe from our UK facility.
Okay, Lorraine Lowe asks, does SpectrumX own the patent portfolio?
So again, we hold the license for the lifetime of the patent. The patent itself is held by Spectrum Antimicrobials. We have the license for the UK and the EU 27. Spectrum Antimicrobials retain the ownership of the IP and the rights to those markets at this time.
What's the financial relationship between you and Spectrum Antimicrobials in the States?
So it varies from one license to another, but it's essentially an ongoing royalty payment. So we pay a percentage of our net turnover to Spectrum Antimicrobials, and then depending on which product we're licensing, there is potentially some upfront cash depending on which product it is. What
kind of relationship do you have with each other, though? I understand you've got a shareholding in Spectrum Antimicrobials.
So we have some personal shareholdings in Spectrum Antimicrobials, and longer term, the idea is that SpectrumX itself will become an equity holder in Spectrum Antimicrobials.
Good man. Keith Hind asks, are there other potential uses for your product beyond the hand sanitizer and the nebulizer?
Yes, I mean, I definitely haven't got time to go through all of those, Donald. But yes, particularly, obviously, we also have a subsidiary, which is a cosmetics company. Given that the product is extremely antimicrobial, we believe that as a standalone business is extremely exciting. Our product portfolio range and pipeline through the United States also includes a CPAP water, a wound care product, and various other chemistries which they have patents on.
But it must be extremely unusual to have a product which can cover so many different areas effectively.
Indeed, the versatility of the molecule is quite incredible, to be honest with you. As you see, essentially it's efficacious against all bacteria, all viruses. So, moving forward against bronchitis, pneumonia, influenza, COVID, common cold. The R&D project is finished. We now need to roll out the authorizations.
So is the sanitizer available retail, says Mark Proudfoot?
It is, yes. So www.spectraskin.com is our collaboration with the Hut Group. That's very much a separate, standalone, wholly owned subsidiary. It is a focus of ours, but very much at the moment our focus is on the pharma and healthcare applications. But that business is up and running quite nicely.
Okay, and over to my questions. Where does your funding come from currently, and will you be raising funding in the IPO in the last week of November?
Yes, it is. So as I said, so we are roughly 5 million through our 8 million pre-IPO round. We are planning to raise an additional 2 million at market entry. The original shareholders put in circa 3 million. So we will be would have been 13 million in total by the time we get to market.
Okay, and what are your CapEx needs going forward?
Well, as I mentioned, we need to roll out another production facility somewhere in mainland Europe, which is a costly experience. And then obviously going back to what I said there, we don't need to do R&D anymore because we know that the product is efficacious against all the other infections I mentioned. But what we do need to do are clinical trials to prove that to the regulator and get the regulatory approval so we can get it into the market.
You're looking for emergency authorization to get SPC 069 available commercially. How is that emergency authorization coming along?
So the documents have been prepared for EMA and MHRA, or are in the process of being prepared. Essentially, as soon as we have our trial data, those will be filed immediately.
Okay. University Hospitals of Innsbruck, you mentioned the Chelsea and Westminster Hospital. You have different clinical trials going on in both these places. Presumably those are extremely important for you.
Yes, absolutely. So apologies. So the second trial we're running this winter is with Chelsea and Westminster. So that will be for all non-COVID respiratory infection treatments. So we will be enrolling patients who present with respiratory infection symptoms, but test negative for COVID. So again, bronchitis, pneumonia, flu, things like that.
You have 3 potential revenue streams: pharmaceuticals, sterilization, and cosmetics. Those are your 3 baskets, if you like. So what are your current revenues in those areas, and what are your predicted revenues up to, say, 2 years' time, just to give people a sense of scale and your ambition?
Well, yeah, obviously, so we're pre-revenue for our pharma products because obviously we need our authorizations to go to market. As I think I said when I was with you last time, Donald, we're targeting between 600 to 800 million euros or dollars of the respiratory infection treatment market in the UK and Europe. Okay.
Malcolm Hopkins, I'm not sure you can answer this, so don't if we're breaking all the rules. What share price Malcolm Hopkins asks, what share price do you think the company will IPO at, or are you hoping to IPO at? When you've told me you hope for a conservative estimate of £50 million.
Yeah, I think I'm not really in a position to comment further than that at the moment.
Don't comment then. But you can tell us about the £50 million again.
Yes,
that's a good valuation.
Yes. But yeah, we're very excited to make our entry to the London Stock Exchange.
Who are the main shareholders, says Rizna Kanom? Who are the main shareholders, and what do you expect the percentages to be of the free float? Do you know what I mean by free float?
Yeah, so we anticipate providing 25% free float when we come to market. Obviously, we've got 3 current shareholders, including myself and Aziz. The convertible loan note holders of that 8 million debt will obviously all become shareholders at listing. And then obviously, as I said, we're looking to raise an additional 2 million at listing. So obviously that would be made up of those shareholders as well.
Last 2 questions. What are the other significant milestones to watch out for?
I mean, the significant milestones are obviously trial data. The other significant milestone would be a potential emergency use authorization for the product for flu in addition to COVID-19. I think that really much depends on how the situation is and how bad a flu season we're going to have. But that's certainly a potential possibility for us that we would be able to achieve that.
My final question: why should retail investors hold SpectrumX stock? What's your investment pitch to them? I know you've given us 20 minutes or 30 minutes of it, but summarize why now?
I mean, listen, we're committed to creating long-term shareholder value. So we're not looking for short-term shareholders. We're looking for individuals who want to come along for the long-term ride with us. And as I said, in terms of milestones and emergency or normal use approvals in the drug market and across Europe, clearly the pharmaceutical market is a very costly and very lengthy process to get the approvals. So it's certainly not something, or the business is not a business where we're going to achieve all of our value in a very short period of time. There will be progressive jumps in value as we achieve various applications or additional application uses for the product.
Okay, that's it. We're out of time. Thank you very much to Damian Hancock, CEO of SpectrumX. He was fantastic. What an interesting company. Last, but classically, most definitely not least, thank you so much, Damian. That was fantastic.
Thank you very much for having me, Donald.
And that's it for another evening. A huge thank you to all our companies for being with us tonight, and to all their teams for putting all the hard work in behind the scenes for getting us there. And not to forget the London South East team behind the scenes who've got us all collectively there at our end. They've all put in some hard graft to get this event to you. And thank you once again to our sponsors, Primary Bid, who have a constant flow of interesting investment opportunities for you. And just go to their website, primarybid.com, I think it was, off the top of my head. By the end of play tomorrow, we hope to have edited and released all 4 company presentations for you. That's what I will be spending tomorrow doing. It's extremely hard work, let me say. And if you subscribe to our London South East YouTube channel, you'll get to see these first of all. I've heard investor feedback saying how useful it is that we send these presentations, videos of the presentations out and about. And by the end of the week, we'll package together the company slides and the videos in one useful email to everybody who registered for this event. So look out for that. And of course, we'll be doing this all over again with Greatland Gold and Poolbeg Pharma on Tuesday, the 19th of October. That really is a date in your diary and one not to be missed. A huge thank you for being such a great audience and staying with us to the end. I hope it wasn't the bitter end. We're truly grateful for your time. Good night, and may all your investments go well.